Hello and welcome to another CMS Forex Daily Market Recap. I'm your market analyst Nick Nassad, and today is Thursday, November 4th, 2009. Today's recap is going to mainly cover the FOMC statement and the reaction of the market to it. If you would like to hear about the overnight action and earlier releases, please visit fxtimes.com and watch our morning brief. Today's FOMC statement had little in the way of surprises, as the statement kept the same language about keeping rates at the current low levels for an extended period of time, meaning that the Fed was not ready to push up its plans to raise rates. The Fed did announce that they would lower the amount of housing agency debt that they would purchase from $200 billion to $175 billion. The statement also showed that the Fed does not consider inflation a threat currently, and from the way things were worded, it seems that the Fed sees inflation risks on the downside currently. On the outlook on the economy, the Fed said that the housing sector was improving, but that household spending, though expanding, remained constrained by ongoing job losses, sluggish income growth, lower housing wealth, and tight credit. Overall, the statement was a slightly dovish one, and the greenback fell slightly in its aftermath. If we take a look at the euro-dollar chart, we see overnight how the euro had a very strong rally, and that prior to the FOMC statement, we found resistance at around the 1.4850 level. In the wake of the FOMC release, since the Fed did keep the mention of keeping rates low for an extended period of time, the greenback was weaker and the euro jumped to the 1.49 level. However, those gains were pared down rather quickly, and then there was a second attempt to move back up to 1.49. However, the euro didn't break above that level, and some of those initial gains were pared by the end of the session. The 1.4850 level has been resistance for our sideways channel that we had seen for most of this week, with support at around 1.4680. Therefore, today's move put the euro at its highest since last Tuesday against the dollar. The pound-dollar pair saw a slightly smaller move following the FOMC statement, reaching close to the 1.66 level, but here too we saw those initial gains pare down. If we take a look at this pair for most of today, we had a strong rally overnight, which was followed by several periods of consolidation. We had here, and then you could see these red candles following our surge here, and another set of red candles following our move in the wake of the FOMC release. We closed today above 1.6550, and that could be a positive sign for this pair, though we did fall back from resistance from last week around 1.66. Are now at the resistance level of our sideways channel, and it'll be interesting to see if this pair moves above this level or if we fall back down into our sideways trading that we had seen the last 2 weeks. The dollar-yen saw an initial burst following the FOMC statement, with the pair reaching 91.30, but those gains were pared down within the 30 minutes of the release, and we wound up closing slightly lower than we were to start New York trading. We're testing this area here around 90.55 now as a level that had acted as resistance in yesterday's trading, but is now acting as support. We'll see if it holds overnight and which way the pair will go in our trading for tomorrow's session. The US dollar Canadian dollar pair fell below its recent support at 1.0650. I'll zoom out to show you that support level here. We fell below that in today's overnight trading, and following the FOMC statement, we stayed below that level. If this break of support means that we might see some further Canadian dollar strength, will be determined in how this pair acts in overnight trading and also in tomorrow's session. So today's FOMC statement lacked any big fireworks, and the reactions to it were rather muted, as the Fed stayed relatively close to its statement from last time. Taking a look at some upcoming releases, we see that tonight New Zealand releases data on employment, and Australia will post its trade balance, while overnight Switzerland releases two sets of reports, one on consumer climate or consumer confidence, and a second on consumer prices. The UK, meanwhile, will post its manufacturing and industrial production data, and the Eurozone will release its retail sales. Tomorrow we get interest rate decisions from the Bank of England and the European Central Bank, with the Bank of England being watched more closely as traders are anticipating the announcement and the statement to see what they will do about their quantitative easing program. In the US, we get weekly jobless claims data, along with labor productivity and costs figures. In Canada, we get a measure of business activity in the IV PMI. And that'll wrap up today's daily video recap. Thank you for joining me here at fxtimes.com, and see you next time.